It used to be thought that once the Fed brought the interest rate down to zero, that basically we might as well all go home because there was nothing else you could do. The Federal Reserve was out of ammunition. I've never believed that to be the case, and I've talked about that in the past. I do think there's other things the Federal Reserve can do to create more expansionary financial conditions. And we've done that, and one of the things that we've done a number of things, we created a number of programs. One of the things that we've done is that we purchased large quantities of Treasury securities and mortgage-backed securities, which are the Fannie and Freddie I talked about before. Those are the packaged securities that are made up of the mortgages that are purchased by Fannie and Freddie. So we purchased a very large quantity of those in 2009. It was a particularly big program beginning in March of 2009. And I'm quite persuaded that by these purchases, we were able to lower interest rates, increase the willingness of investors to take a reasonable amount of risk, and to create some support for the economy. And indeed, between March of 2009, when we stepped up our buying program, and the end of the first quarter of 2010, when we called at least a temporary halt there, the economy began to improve considerably, and financial markets, and stock market, and so on, grew quite quickly. So I think this was an effective program. There are many different estimates of the impact of this, and it probably depends considerably on how financial markets are operating. So I don't have a number to give you, but I do think that the additional purchases, although we don't have precise numbers for how big the effects are, I do think they have the ability to ease financial conditions.